At this point, you've been perhaps painfully long the U.S. over the rest of the world, and this has been sort of a contrarian trade as everyone piled into Europe and the rest of the world. That's starting to shift around the margins, at least this week. What gives you confidence that it has staying power and that you'll basically be able to say, I was right all along, it just took a little bit?
We never say that, Lisa.
Okay,
but nonetheless, look, we think that the U.S. has some really good qualities to it, right? So the Federal Reserve was one of the first central banks to start raising interest rates. Inflation in the U.S. peaked a number of months ago. It's on the right trajectory and going in the right direction, if not fast enough for all market participants. But in Europe, think about this. A lot of bad news had been in the price in the fourth quarter of last year. A lot of things didn't happen. So not necessarily incrementally good news, but the disaster scenario didn't happen. You need things to go in the right direction for Europe to continue to work. A lot of fund managers are indeed putting assets out there. We're seeing asset allocators start to put money overseas. That's generally when the data has to really start breaking your way. If you think the U.S. has an inflation problem, Europe has a much bigger one and a much stickier one, and their central bank is much further behind the curve than the U.S. is. So at the margin, we think that the U.S. is likely to outpace the rest of the world.